Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm excited to share with you that we've created a new series. This is a topical series where we've taken previously recorded clips, compiled them by topic, idea, and particular concepts within the infinite banking footprint and the financial world broadly. Topics will include loans, loan repayments, paid up additions riders, other riders, dividends, long-term thinking, what could go wrong, what does go wrong within the infinite banking footprint. And I hope you enjoy listening. And it was created for your edification. Thank you.
Finance was my major, economics was my minor. And I remember being in economics classes, a bunch of like the higher end ones, like labor economics and some of these other ones. People were lost, and I just didn't understand why they were lost. And I guess it's a similar thing to that. I think they're just overthinking it. Yeah. That's what it comes down to. Because if you're struggling in whether it's macroeconomics or micro, you're overthinking it and you're not looking. I mean, the concepts are pretty basic and simple. And this is really basic and simple to me.
Yeah, it's not complicated. And I think I see a lot of, and real estate investors are like anyone else. I mean, they may be more entrepreneurial or what have you. But we're all the same. Essentially, it's like, it seems to me that they have a hard time getting past the word life insurance, number one. Yeah. And then they have a hard time because they focus on the interest rates, and the financial world really wants to boil life insurance down to a premium and a death benefit. And then the liquidity, the loss of liquidity in the early years, that stymies or hinders, real estate investors and just, across the board, no matter what their background is.
Yeah, you got to look at it. I totally understand. I agree with it, but you got to look at it I look at it in multiple ways. I look at it as a tool for me to borrow and grow my business. The other way I look at it, it's a retirement vehicle potentially for me too, right? Because I could take loans against this down the road that I don't pay back. So it depends how you look at it. I looked at it as a two-thought concept. I talked to you a little bit about that back then. And and you explained how it could be used and how if you just don't pay it back, it's a loan that's not paid back, right? I mean, it's pretty simple. So you just lower the value of your total payout of your death benefit, in essence, is what it is. But it just gives you such ease of use. And I'll give you a great example. So I used this on a property in the Pocono Mountains in Pennsylvania, East Stroudsburg. It was a property I picked up on auction. I bought it for $40,000 and put $10,000 into it. So I was in it for $50,000. Rented it for about a year and a half, maybe 2 years. And during that time, the market really increased. I ended up selling this property for $155,000. So what I ended up doing was obviously paying my loan back, but then that gave me money to pay the future paid up additions riders for future years, right? So be able to stash some money into the future.
Well, so you only had 10 in the deal, unless I missed something. You only had 10 in that. Right. I only had
$10,000 in repairs into that property. That's correct.
Okay.
Yeah.
Okay. I got it.
So $50,000 in total. I pulled a total loan was $50K. I ended up making a net after paying commissions, everything about $150 on it. So 50 plus I had $100K, which I ended up paying, like I said, future paid up additions riders. Plus I also used it for other projects too. So what that turned into was phenomenal. So you see the power of its use and what you could do. Part of it was lucky with timing, right? Mm-hmm. When I bought in the market, it was down and the market ended up skyrocketing. It's not always going to happen, but timing is pivotal, obviously.
Yeah. That had to just make you want to look for the next one to do one more, 10 totally. More, right?
Yeah. Yeah, I've got a few different loans right now in both cryptos and real estate right now that I've utilized my policy for. So I'm trying to use every dollar I can whenever I can.
Yeah. So what do you do? What do you do in the real estate world? And then, share with us what you do in the crypto world. So two different worlds, but what are you doing?
So in the real estate world, I buy almost exclusively in online auctions. I do buy some from wholesalers, and wholesalers are just people that get properties under contract and sell them to another buyer, whether it's an investor or an end user. So I do buy from them as well, but mostly online auctions. I bought in 44 of the 50 states. Bought and sold. I have a 12-unit building in Casper, Wyoming, a 5-unit and 3 singles out there in Casper and Gillette, Wyoming. Sold all my rentals in Pennsylvania, shifting them down to Florida where I am. I have some in Dallas, and I'm looking to add some in Tennessee too. And then what we did was we opened up an educational. There was a lot of interest when I was on a lot of different podcasts from people who want to learn how to do what I'm doing. So we created an educational company. It's still fairly small, but it's growing. I think we've got like 49 students right now in totality. But that still continues to grow. And we teach people how to do what we're doing now. And that's been fun. It's a lot of fun.
My point is that value of that stock can go up or down.
Or go away.
Right. And then, do I care if, Home Depot's profitable? Well, sure, I care just enough because I'm going to continue buying products there. Where if I'm borrowing against my cash value, the cash value that I have in my policy by guaranteed contract, and I own a policy with a mutual company, I am an owner of that mutual company. Do I mind paying them interest on a loan? Go borrow money from Home Depot. Oh, they do have credit cards. What? And what is the rate on the credit card? So I can practice banking with anything, right? Banking is a process. It's a movement of money, deposits, withdrawals, loans, loan repayments. So when we talk about banking, quote unquote banking, we're talking about the movement of money. So I can bank with anything.
Yeah, you can put the tin can, you can put it on your mattress.
I can bank with cows, tractors, cars, whatever it is.
But nothing gives you the tax-free or tax-deferred
preferential tax treatment, or maybe it's properly taxed, right? Because life insurance, it's a loss. If I graduate, my family loses me and they lose all of my future income. It's like you have an automobile accident, you get a check, right, for the loss of that damage.
And that check comes quickly.
And but it's tax free if it's an insurance, right? So, it's the same with life insurance. So it's really appropriately taxed, in my opinion, because it's a loss. It's not an investment. It's not a gain. It's a replacement of a loss. Therefore, it shouldn't be taxed.
It's a replacement of a life value or income. Yeah. So,
and think about that. Some guy 3,000 miles away, i.e. the underwriter, the whole life insurance industry is going to put a value on my human life value, human economic value. It's like, whatever. But look, anything you do has rules, right?
And the other thing that is so wonderful about these policies, especially the ones that I have, is I can borrow the money from the policy, and because I'm borrowing the money from the company, not directly from myself, they treat my money, even though I borrowed against it, as if it's still there. So my dividends and interests are still based on whatever cash values I had in there.
Oh, you must have non-direct recognition companies.
Non-direct
Does that matter? Only if you're banking, quote unquote, right?
Oh, yeah.
If you're not banking, it might not matter.
And I've heard some people say it doesn't matter that much if it's recognized or not recognized, but I'd rather have the non-recognized because I know what's going to happen.
Yeah, no, we can talk about that. And, people do whatever they do. And because you hear that all the time. Oh, well, you're just getting lost in the weeds. And no, not at all. If we're practicing banking, then there's interest, right? So if there's interest, there's a cost of that capital on a policy loan, right? Well, if you're going to reduce my dividend for that balance that's outstanding, isn't that another form of the cost to capital? Yeah. And it's like, it does matter. And I've seen illustrations where, they build jank policies with the company A, direct recognition, company B, non-direct recognition. And it's pretty much the guys or the people who think you should own and it doesn't matter, or direct recognition companies. They're like, yeah, it doesn't matter. So I've seen these illustrations where they'll go out 10 years of premium payments and then start financing. Oh, okay. And it's... it just speaks to illustrations, building illustrations and comparisons and this, comparative analysis. They're really just playing games with numbers on a page, in my opinion. It's very simple, right? And it doesn't have to be complicated, is my point.
And like I said, I read a lot, and so I'm probably a little bit further along than most people that are just starting out, but it's...
Well, you should be after 12 years or 13.
Yeah, 12, 13 years. And I'm going to continue learning because, like I said, and writing a book, you actually learn even more, and teaching it, you learn more because people come to you with all kinds of questions, and like I said, there's a lot of naysayers out there, and it's funny. I've learned over the years you can't predict who's going to get it, who's not going to get it. I have people that are financially savvy, that understand finance, that don't get it.
Yeah.
And I've got friends that just based on trust, they get it. And 10 years later, 8 years later, they're saying, man, I'm so glad I did this. I'm grateful that you taught me this and showed it to me. And like I said, it's interesting.
The whole delaying thing. You know, it's like however long you want to postpone that, and you were the first to make the point, and to me at least, and it's so true that the longer you wait, the years of growth that you're cutting off from the contract are not the less efficient years in the earlier time frame. It's the greatest gains latest in the life of the contract.
The most efficient part of that contract
is what you're cutting off.
You're killing it. But then it's natural. Listen, I'm 50 something years old, and I'm too old. You know, I'm 60. I'm too old. I'm 70. I'm too old. I'm not going to be here. Well, that's selfish, isn't it? If you think about it, let's just call it what it is, right? These the resistance to think long term. I get it.
That's really what it is, yeah.
It is. But it's really, I think it's selfish, personally, right? I'm not saying you're selfish. I'm saying that's selfish thinking because you're not thinking in total. You're not considering the total picture, right? I'm not going to be here in 50 years. I'm not going to be here in 40 years. Maybe. With the correct gene therapy that's not put out by Moderna or Pfizer. I'm just saying. But that doesn't mean my people aren't going to be here. My children, my future grandchildren that may or may not occur. Or the organizations, I have nieces, I have nephews. You know, I have grandnieces and nephews. So I think Ecclesiastes, you know, vanity of vanities, everything that you've created, earned, saved, and didn't give away, spend, or consume is going to be left to someone else. All right, so should I be so selfish to spend everything? And you can do that. And I don't want to come off too harshly. But if you have people or things that you love, ideas and organizations that you love and support, why would you want to cut off the most efficient part of that policy, even though you may not directly benefit from it? It's the same thing as planting a shade tree, you know. So, okay, you may not enjoy the shade because it takes so long for a particular hardwood to grow or whatever, but somebody is. So just because you're not going to, does that mean you shouldn't? No. That makes sense?
Oh, yeah. And as you were going through that, too, what came to mind is that, you know, every time we pay a premium, base or PUA, you know, it's paying, there's a sense in which you're paying something forward, right? With PUA, you're literally increasing that future death benefit. Yeah.
Future cash value, future dividends, everything.
The longer you pay base premium or the further you are into a contract, the more dividends that have been issued that are getting sent to PUA that are continually increasing the magnitude of that future cash flow and the death benefit. All that's going to go to somebody anyway. You know, it's like everything else happens within that nest. The only reason you get cash value, the only reason you get capital at all, the only reason you can take advantage of or take control of the banking function is because you're throwing out something for somebody else in the future. You know, the only reason the cash value is there is because the death benefit's there. And that death benefit is just something that somebody else is going to enjoy anyway.
Right.
And so
no question. That's well put.
Yeah, you only get these benefits to yourself.
Well, listen, that's the whole...
Because you're doing something for somebody else.
The whole concept of life insurance, you know, I did a Q&A and the insurability came up. And I'm going to have to shoot a video and link it to this Q&A because they're talking about insurability and skipped right over the most fundamental basic principle of insurability. what makes someone insurable? Well, there's human economic value, human life value, and income replacement. And there's different, factors to determine someone's insurability, right? But at the bottom, the very bottom, very basic, fundamental, and the reason life insurance is tax-free, income tax-free, is because it is a replacement of a loss, the death benefit, right? It's not an investment. And whenever we've talked about it, I've said it over and over and over, when somebody mentions infinite banking concept and investment, that it is an investment or life insurance is an investment, you need to just back up because it's not true. Either they're misspeaking out of ignorance or they know and they're just trying to compare life insurance to an investment. Life insurance is not an investment. It's a replacement of a loss. If I die, my family loses all of my future income in addition to losing me, the greatest thing that ever happened to them. I'm kidding. I'm just checking to see if my wife is going to listen to this podcast, right? I love them. They're the greatest thing that's ever happened to me. I said that on purpose for my wife. Okay. So the income, the death benefit is income replacement. That's why it's tax-free. So the idea that you're going to leave something to somebody else is a very fundamental philosophy of life insurance. I'm thinking about someone else. I love someone else. Mm-hmm. I care about someone else or a cause or whatever it is. And if I die, when I graduate, there's no ifs, ands, or buts about it. When I graduate, I still want them to be taken care of. And I'm not physically here to do that. So I'm going to, leave a big honking pile of money, to help ease their pain. So I'm just saying that fundamentally, philosophically, life insurance is based in benevolence, right? And two, now I get it today, we've got the nanny state, the Great Society and, all of these things these great waves of socialism making the all-American individual dependent upon the government. I get that. Prior to all this dependency, if we graduated, our family would be dependent upon the largesse of the family, other people that love them, maybe the state, maybe the orphanages, and you go back far enough, there was not all these safety nets. And I'm not against the safety net when I'm berating the nanny state. Mm-hmm. I'm not berating, a safety net for orphans and widows. I mean, I think that's biblical, and most people abdicate their responsibility to even do that. Mm-hmm. So I want to be encouraging. Don't abdicate your responsibility for life insurance. Okay, well, all right. So if I don't love anyone, if I don't care about anyone, I'm surely not interested in life insurance.
Right.
But if I do love someone and I do care about them and I want them to be cared for after I graduate, life insurance is the greatest asset in the financial world. Oh, then comes along Nelson Nash, who's had great experience with the bankers and understood their lineage, right? And said, listen, boy, your need for finance is greater than your need for death benefit. And then, boom, add scale to it. Look, the pensions are underwater. Right. They've been underwater, and it's going to get worse. Oh, wait a minute. You can't guarantee 7, 8, and 9% rates of return, and that's what most of the pensions are built on. And then the pensions are forced to buy government bonds. Right. Think about this, right? And U.S. Treasuries and all-time 6,000-year low in interest rates. I mean, 6,000 years of recorded history and the lowest interest rate environment ever. And a certain amount of these, all of the pensions have to buy a certain amount of government bonds, but then they have to use the 7, 8, and 9% actuarial rates of return to deliver the promises, and they can't do that. And one of the biggest parts of the life insurance business today is pension risk transfer. Yeah. All of these companies can't guarantee the pension, so what do? They go sell that whole block of business to a life insurance company, and those bean counters know how to deliver a pension, but it won't be at a 5% rate of return.
That's what frustrated me. And I actually ran for the pension board once, and like I said, I'm not a big promoter, and I was not as vocal as I should be, but I was talking about, and it was really too late even then when I ran, but the dominoes were already falling for the police and fire pension, but people just didn't want to hear what I felt like was the truth. And well, a lot of people did, but nobody really on the board. And, you know, they would say everything is, well, we got an actuary. And they said it's fine. But then I'll say, okay, but what if, I'll say, all your lines go up. I said, what happens if we at just one down year, you know? Yeah. And then they go, oh, yeah, no. But
all the numbers on the right side of the page change.
As long as you spread the liability, where no one person or no one party can be said, well, they just shuffle it around enough to where nobody's to blame. But
yep,
the working guys get the brunt of it.
Mm-hmm. And the new guys get nothing near what y'all were promised.
Right. That is correct.
Wait, but neither do y'all.
That's right. And that is the big deal. I feel like I have to replace the blessing that I have as far as fire department pension, but I don't trust it.
Yeah.
I do not trust it. And what they say you get today is they could change it next month. And so I like listening to people like you and looking at products like this to work on replacing what somebody else says I get to have with something a little more under my control.
Yeah. You know, if you're going to take a risk, you might as well, if you can, take the risk that you have some control in. Right. So have you done some real estate deals or activities?
I have. We'd talked about that. You and I had when I first got into it, and I have done that. I have several odds and ends through usually using the cash values as either a down payment or something, or some way to fund a project. And then I'm really kind of surprised you asked me to come on the podcast, because I haven't been great about paying those loans back up to this point, but it's coming.
Well, you have an opportunity, right? You can repay a loan at any time.
I do. Yes.
You can only pay a premium annually. Right. So, you know, premium does have priority, in my opinion, over loan repayments. However, you can't let the loans grow out of control.
Right.
And your loans are not out of control. And I don't want to.
Well, I need to do better.
And we can all do better. No question about that. And then too, you continue buying policies. Right. You know, you continue paying premium, not only on your policy, but all the other policies that you own. And then I don't even know if you own, I don't think, and I don't want to cross any bounds, but I mean, just the people around you, you've caused other family members to get involved, and not from forcing position. It's like you're doing it, you're leading by example, and you're just sharing that with them. And you know, some get it, you know, and some don't. But it just seems to me like you're doing, you know, you've got a pretty good influence on your family.
I think so, and I think it's our family in general is pretty long-term oriented with stuff, and you know, my daughter Sean and her husband Tyler, they've really done well with it. And
yes, they have. Thank you, Sean. Thank you, Tyler.
Son,
I hope they listen, but you know, they got to listen more than 15 minutes to hear
my son Shay and his wife Jennifer. They didn't really understand it, and but we do have policies on both their kids, so they're going to see the benefits of that and everything down the road. So I enjoy getting my deals where I got to put I enjoy writing those checks to fund those policies for them, because they call me PJ and call Melissa Missy. So PJ and Missy, they'll be thanking us.
What's important to me is cash flow.
Yeah.
Right. I could have $1 million. Like my dad, he's got a bunch of money, right? And he could have a lot more cash flow, but he's he's happy with it sitting there.
Yeah.
All of it. I'm drooling, going, just loan it to me. You know, I don't want to pay the tax. I'll pay the taxes. Let's make this stuff move. You know, but it's an indication of his generation too.
Yep, absolutely.
Okay, they want that savings there. You know,
Yep.
So, and that's good. It's his thing. It's fine. It's great. But for me, I can't put money aside and wait till I'm 70. What? I need to use it now. You know. So how do we do that? How do you can't, the 401k will not allow you to do that. It's IRAs, you know, and then they say, oh, you can do IRAs and do, you know, putting $7,000 a year in an account.
Yeah.
We're not big fish by any means. Okay. But I run that through my checking account in 2 weeks.
Yeah.
In business, you know, with stuff, you know,
it's going to take a long time.
It's going to take a long time. You know, so
Right.
there's a different thing, you know, even life insurance at some level. There's limitations to the whole thing, you know?
Absolutely.
All right. So that's why you talk about, insuring your kids and all these other things, you know, so there's, you know, as we grow the business, that's, you know, we'll talk about that, but that's the next avenue, you know, adding more places to utilize and build the bank, you know? So.
Well, I was, it just, when you said earlier, some of the things that triggered my memory on checking the boxes on the early conversation, if I can, it was your life insurance. The term had an end date that was coming up. Mm-hmm. You had more cash than you were comfortable with just in the bank setting. Safety was a big deal because there's an adequate amount of risk inherent with the equities, right?
Correct.
But then you're in business and you're doing a lot of things, so there had to be some access to it.
Correct.
To not impede what y'all are doing and had laid out and continue to do. And then legacy was a big deal.
Yes.
Right. Well, with 6 children, of course, I think the more children you have, maybe, and the older that we get, you know, the more legacy becomes important.
Yeah.
And so how long have y'all been doing this?
So Lori's policy was a year.
1 year.
I literally, like 2 weeks ago, just pulled some money out of the checking accounts, got yelled at for it, for doing it before talking to her. But no,
those things happen, right?
I thought we had the conversation, but I guess not. You know?
Y'all had it in your own mind.
You know, we
thought it through.
Well, listen, we're in an office about half this size, and we got desks, kind of sort of the 4 of us, you know, and I remember asking her about it, but maybe that was a conversation in my own head. But anyways, we paid her premiums and all that down. We took a loan out right away, and we'll talk about that. And then my policy is coming up, February, I think? Something like that.
I should know. I can walk in the other end.
No. I looked at it. I looked at it the other day. But anyways, this is small details. You know, when Christmas slows down, that's when I'll go through and look at all this stuff. But so I'll have to get the premium in there, and that'll be a year for me. And then when we first took the policies out, the time, it was interesting because we started, the conversation started in maybe November, end of October. Yeah, that's what it was. It was like November, beginning of November. I talked to Julie. She, ran me through the process, and it was fun. She was nice and asking the questions and doing her thing. And then you were busy, so we talked like first week of December. Had a sit down. I'll never forget. I was in the commercial kitchen at the church property, and you called and we were talking, and I had my notes in my pocket. I need to solve for these problems, right? And that was it.
You were pretty adamant. I mean, I
was ready to go. Yeah, you didn't have to sell me on anything or do anything. I just wanted to kind of sort of know the details, because the details were going to be important for lack of a better way to say it, selling it to Lori, right? Okay, so anyhow, so we established the policies, and in concurrent to that whole thing, we had another opportunity that came up, or we've been looking for an opportunity. So we had started the business originally, and we got a 40-acre property, and we had a barn that we built. This is beautiful. We call it a farm, but it's more of It's more of a resort. It looks like, it's more of a ranch kind of sort of thing, Big pine trees and oak trees and things like that. It's beautiful. We started the wedding business there. It grew. We moved it off-site to another barn venue, which has become very successful. One of the top venues in the Charlotte area.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.